For the time being, let's discuss a few stocks. And to do that, we have Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Well, in the next few minutes, we'll actually see a large trade on Z. And the stock could be down close to around 1% or just going by the discount. What's your sense on this space? There are synergy benefits that will play out once the merger comes into play. And also the company will get a relatively higher multiple. Are you enthused?
Yeah, Nigel, thanks for having me on your show and good morning. Yes, I think after many quarters of dismal news flow from Z, maybe when the merger actually takes place, will inject some positive sentiment to the stock. Clearly, I think the MNC tag should command a higher price to earnings multiple, and maybe investors will forget the last quarter, June quarter, which was quite dismal for the company. And this festive season is shaping up well for advertisers. So I think Z should do well for the September and December quarter as well. And let's see what the progress is being made on Z5, the OTT offering. Yes, but you're right, absolutely, that there is certainly a case for multiples to move up in a post-merger scenario, given the dominant position of the merged entity within the media space. So you could have a nice trading rally up to the time when the stock actually gets traded on a merged basis.
Okay, that's Z. Dipan, hi, good morning. What about Canfin Homes? That's the other one, right? Around which there was so much hand-wringing and confusion. Now the numbers are out. Have you given them a look?
Yeah, Prashant, good morning. Not that much in detail, but clearly there is no adverse outflow of the departure of the CEO. And at least there doesn't seem to be any corporate governance or any negative news flow on that count. Valuations have corrected significantly over the past few months. And I think that being the kind of company it is, it's a very good housing finance company, having kept its nose completely clean right through all the trials and tribulations of the NBFC industry. And given that CanBank also is a sponsor bank, so shouldn't have trouble raising resources, we are quite positive on the stock. And even if the results are soft as the market perceives it to be, going forward, the potential is exceptional given the volume uptick which we are seeing in the real estate industry. And I think P multiples, price to book also should revert back to normal. So I think very positive for Canfin shareholders. And the stock may outperform over the next 2-3 months or quarters also.
Okay, Dipan, hi, good morning. The other stock in focus this morning is TVS Motor. In fact, there are 2 upgrades that have come in the last 2 days on TVS Motor. So just wanted to get that on board. This morning, UBS has raised their target price to 1385 from 1100 on TVS. They're saying that the company is racing ahead in the electric vehicle segment and is assuming segment leadership there. They expect 5 electric vehicle launches over the next 12 to 15 months from the TVS stable, and the premiumization of the ICE engines will also cushion margins against any EV losses if they come through. They've raised their EV volume estimates as well. Yesterday, in fact, DAM Capital upgraded the earnings of TVS Motor, upgraded both FY23 and FY24 earnings by 13% each, and they say that there's strong volume outperformance that TVS is seeing. And there's a 270 basis points market share improvement in the scooter segment year to date in FY23 so far. And they've revised their target price higher to 1400 rupees. Dipan, you know, TVS is the only two-wheeler maker that has expanded its presence in all the high growth categories, whether it's premium motorcycles, scooters, electric vehicles. Do you think the best is yet to come, or is all the good news in the price?
Good morning, Sonia. I think TVS is an amazing company, and it's not just what they have done recently, but over the years, they've expanded capacities, they've tried to work on exports, and they are present in every sub-segment of the two-wheeler space. And that clearly has benefited them, but also it trades at premium multiples, equivalent or higher to Eicher Motors, and certainly considerably higher price to earnings multiple than Hero MotoCorp and Bajaj Auto. And it's for these valid reasons which you just spoke about. But on the whole, I think we expect that the two-wheeler space is going to get crowded with new players coming in the EV segment. And keeping the valuations in mind, we like to be a bit cautious on TVS Motors. Existing investors can remain invested, and you could see at least next 2-3 quarters, maybe 2-3 years, do well for the company. But from a fresh investment perspective, I think there are better ideas within the auto space, auto ancillary, which may outperform TVS Motors as well. So that's the view at this point of time.